Okay, so I made a tweet talking about the number of moving average crossovers in the previous n number of candles. And my post here basically says that the closer that number is to zero, the more of a trending environment you're looking at. The closer that number is to infinity, the more of a range bound of a market environment you are looking at. Okay, so to give an example, here we have very sideways looking price action. So if we were to draw a bunch of moving averages through this price action, and then we were to count how many times did the moving averages cross over, it's probably going to be a lot, right? In the last, let's say in the last 4 hours, the last 8 hours, it could have crossed over like 10 times. And because this is a high number, we can say, okay, well, probably we're looking at range-bound type of price action. On the other extreme, if we have a one-directional trend, and then we were to draw moving average, so this is price, this is moving average 1, and then this is a slower moving average 2, and we asked the same question in the last 8 hours, how many times did the moving averages cross over? The answer is 0. And if the answer is 0, then it's probably because you're looking at a very strong one-directional trend, okay? So that's the context. So this is what Mayan K asked. He said, but how are we supposed to find that threshold? Because I tested a lot of thresholds, even averages for periods as the thresholds, but this didn't give me good results. Okay, so unfortunately, I can't give an objective definition for n. So what I mean by that is I can't sit here and say, okay, if we have 4 moving average crossovers in the last 100 candles, if you were to trade a mean reversion strategy in this regime, you would have a 70% win rate. I can't say something as extreme like that. That has, like, I've tried to go down a similar route, and it's been quite challenging. It's been quite challenging. But here is something that I haven't gone down the rabbit hole fully, but I've been using it with a bit of discretion, and this has been quite helpful. And it's the concept of relative change. Okay? Concept of relative change. Let me explain. So imagine we have a crazy one-directional trend, and then we have a crazy staircase. Or actually, no, let me redraw that. Crazy trend, and then crazy range. And let's say this has been ranging for 4 hours, and let's say this has been trending for 8 hours. Now, and then so this is example 1. This is example 1. And then we have example 2, which is the opposite. So it's been ranging for 4 hours. And then it started trending for the last 8. So in total, we're looking at a 12-hour block of time. If we were to just say, how many moving average crossovers happened in this 12 hours? Well, the answer to example 2 and example 1 is actually going to be the same value, right? Like, let's just pretend that they are the same value. In example 1, it is 10. In example 2, it's 10, right? But does this mean that this is equally as range-bound as that? No, because the most recent market conditions are trending, and here the most recent market conditions are ranging. So actually, if we look at this price action, I think that this one would be better for mean reversion. This one would be better for momentum. So how do we get a clearer definition of this? Because if we just put a static value for n, we've run into this problem where we have 2 examples which have the same value, the same look back window, same number of moving average crossovers, but they're 2 completely different structures. So what's the solution? Here's my approach. I look at relative change. okay? Relative change. So let me explain what this is. I'm going to delete this for a second. I'm going to delete this for a second. And I'm going to delete this and delete this. So we're still looking at the same 12-hour block of time, but this time, imagine, let's just pretend that I'm splitting this 12 hours into 6 blocks of 2 hours. And I'm asking the question, in every one of these 2-hour blocks, how many moving average crossovers did I get? Now in this one, I would have got 5, 5. Maybe here I got like 2. I got 0, 0, 0, 0. All right. And then in this one, it's like we split it into a whole bunch of different chunks. So we have 0, 0, 0, 0. Here we have like 1. Then we have like 5 and then 5. Now here's what relative change means. So when we go from 5 to 5, there is not much difference between 5 moving average crossovers and 5 moving average crossovers. There is very little difference between this block of price action and this block of price action. And because there isn't that much difference, how I would look to trade from this point on, like let's pretend that I can't see the future, right? I can't see how this price action actually unfolds. I would look at this price action and I would say, okay, moving forward, I would like to trade mean reversion, because this looked like a mean reversion environment. Then the next chunk, nothing changed. So therefore, I'm going to assume that nothing has changed, and I'm going to go forward by trading a mean reversion strategy. But then, as I deploy that mean reversion strategy, things start to change, and as this number starts to more and more dramatically change, I'm going to change the approach for how I trade that market. So we went from a 5 to a 2. Okay, maybe this is like a bit of a warning sign. Maybe I'll still keep trading mean reversion, but I'll be on my toes. Like I'll be prepared to step on the brakes. And then we go from 2 to 0. So it's like, okay, I think this is no longer viable for trading mean reversion, because we have had a big change in the regime, right? Here, 5 to 5, not much of a change. 5 to 2, that's a big change. 2 to 0, that's a big change. If we go from 5 to and then all the way to 0, that's a very big change. Therefore, how I look to trade in that environment should also change by a lot, which is I should probably not look to trade mean reversion anymore. And then we go from 0 to 0. Interesting. Not much of a change. Could we be maybe leaning towards a momentum environment? Question mark. From 0, we again remain as 0. It's like, aha, we might actually be in a momentum environment now. I'm actually going to start looking to trade breakouts. And then we go from 0 to 0 again. Cool, nothing has changed, so I'm going to keep trading breakouts. Now let's look at the opposite example. We go from 0 to 0, no change. So I'm going to keep trading breakouts. 0 to 0 again, no change. I'm going to keep trading breakouts. 0 to 0, nothing, no change. I'm still going to keep trading breakouts. 0 to 1, aha, we have a bit of a warning. I'm still going to trade breakouts or momentum, but I'll be on my toes. Now we went from 1 to 5. Oh, my idea might be invalidated, because whatever is going on, it started changing a little bit, and now we have a drastic change. That number drastically changed, right? So I no longer want to trade momentum. And then we went from 5 to 5. Oh, not much of a change. Therefore, we might start leaning more towards a mean reverting type of environment, right? So I hope that makes sense. So it's not, I'm not trying to define N with a static value. This is not me saying, oh, if there was exactly this many moving average crossovers over this many of the previous candles, then this is definitely a ranging environment. And the next trade should definitely be taken as a mean reversion trade. Not quite. I like thinking more in terms of relative change because this helps me think of the difference, or this lets me see to what intensity is the regime changing. And if there is a big intensive change in that regime, then the type of strategy that that regime is going to favor is also going to change. If there's very little relative change, then I shouldn't change anything in the way that I'm executing. I should just keep doing what is already working. But yeah, MyNK, I hope I'm pronouncing that right. Thanks for the question. I loved it, and I'm sure a bunch of other people will find this one helpful. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include like total combined within these two guides, there's more than 75 trade screenshots for you to study, like through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Like literally in the journal, there's a tab called educational resources. And in there, I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.